Welcome to Solidarity Spotlight, the place where we share with you bleeding-edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. A seismic shift in cryptocurrency regulation emerged today as the White House released its long-awaited crypto policy report. This comprehensive document, developed by the President's Working Group on Digital Asset Markets under Treasury Secretary Scott Bessent and SEC Chair Paul Atkins, outlines a framework for integrating digital assets into the mainstream economy. Central to the report are plans to enhance stablecoin regulations, ensure banking access for crypto firms, and address national security concerns tied to virtual assets. While details about a strategic Bitcoin reserve were sparse, the document vastly expands the federal government's official crypto holdings through forfeited assets from enforcement actions. This regulatory roadmap could foster greater institutional confidence, particularly in sectors like tokenized securities and blockchain infrastructure. The report's emphasis on tax clarity and safe harbors for innovation positions the U.S. to lead the global crypto regulatory landscape, potentially accelerating the adoption of decentralized finance, DeFi, and Web3 technologies. Parallel to federal developments, the Securities and Exchange Commission, SEC, made a landmark announcement approving in-kind redemptions for all spot Bitcoin and Ethereum ETFs. This decision, spearheaded by new SEC Chair Paul Atkins, eliminates the cumbersome cash settlement process, allowing institutional investors to directly exchange shares for cryptocurrencies. The change is expected to increase ETF efficiency and reduce operational costs, attracting deeper institutional participation. Major players like BlackRock and Fidelity stand to benefit, potentially flooding markets with fresh capital as authorized participants optimize arbitrage strategies. The SEC also raised options position limits for Bitcoin ETFs, signaling confidence in market maturity and enabling more sophisticated hedging. Combined with the White House report, these moves could trigger a bullish sentiment wave, especially for Ethereum ETFs, given ETH's recent surge in tokenization and smart contract activity. On the corporate front, JPMorgan Chase and Coinbase unveiled a strategic partnership aimed at simplifying crypto adoption for traditional banking customers. The collaboration introduces features like direct bank-to-wallet transfers and Chase credit card integration on Coinbase, bridging the gap between institutional finance and decentralized platforms. Set to launch next year, these tools could revolutionize retail crypto engagement, making advanced trading accessible to less tech-savvy users. This alliance reinforces Ethereum's dominance as a platform for tokenized assets, particularly with increased institutional interest in Layer 2 solutions like Arbitrum and ZK Sync. JPMorgan's move also counters recent regulatory pressures, demonstrating banks' announcements. Proactive stance in positioning themselves as crypto gatekeepers, a trend likely mirrored by other financial giants. Ethereum itself marked a major milestone today as it celebrated its 10th anniversary. Launched in 2015 as a programmable blockchain, Ethereum has evolved from the epicenter of the ICO boom to a foundational layer for Web3 infrastructure and DeFi. Despite past challenges like the 2016 DAO hack and scalability issues, the network embraced forward-thinking solutions such as the merge transition to proof-of-stake in 2022, reducing energy consumption by over 90%. Layer 2 protocols have flourished, with Robinhood opting for Arbitrum technology and Deutsche Bank adopting ZKIC for enterprise blockchain projects. Ethereum's impending founders' tokens and growing institutional treasury holdings, exemplified by Mara Holdings' 64% year-over-year revenue increase and Bitcoin Hyper's focus on enhancing Bitcoin's utility, highlight its enduring relevance despite stiff competition. Security-conscious projects gained traction as Best Wallet token BEST emphasized its role in combating phishing scams through non-custodial security measures. Following a recent Coinbase phishing incident, Best Wallet's use of 2FA and private key custody resonates with users wary of rising cyber threats. Simultaneously, agencies like the FBI intercepted $2.4 million in Bitcoin tied to Chaos ransomware operations, underscoring the importance of security protocols in protecting crypto assets. These developments spotlight the dual evolution of blockchain, both as a conduit for high-value transactions and a target for sophisticated cyber attacks. Innovative DeFi projects also made headlines. Friend DeFi, Primex Finance's user-friendly platform, spun off as a standalone entity, aiming to democratize DeFi through cross-chain swaps, yield farming, and AI-driven strategies. By simplifying complex operations into a seamless interface, Friend DeFi targets mainstream adoption, positioning itself as a gateway for retail investors to engage with blue-chip protocols. This shift toward accessibility mirrors broader trends in crypto, where projects compete to integrate user-centric features like gasless transactions and one-click yield generation. The altcoin market saw mixed signals, with XDC Network outperforming peers by 9.4% following its listing on Binance.us. Bonk, conversely, plummeted 11.2%, reflecting volatility in meme tokens amid shifting investor sentiment. These movements underscore the bifurcation within crypto markets, where utility-focused projects like XDC attract institutional interest, while speculative assets face heightened scrutiny. Quantum computing emerged as a nascent threat, prompting 01 Communique and a crypto foundation led by Antanas Guoga to develop quantum-resistant tokens, using zero-knowledge proofs and post-quantum cryptography. The project aims to secure major blockchains like Bitcoin and Ethereum from future threats. This proactive approach signals the industry's growing awareness of long-term risks and its willingness to innovate preemptively. Meanwhile, telecom giant Orange faced a cyber attack, though details remained sparse. Such incidents highlight the need for robust security infrastructure, a recurring theme across today's stories. Simultaneously, Revolut's reported plans to acquire a U.S. bank could accelerate its crypto services rollout, integrating digital assets into traditional banking frameworks. Institutional adoption continued to accelerate, with Strategy acquiring $2.5 billion worth of Bitcoin, amplifying Bitcoin Hyper's ambitious goal to enhance Bitcoin's blockchain capabilities. This corporate appetite for crypto treasure strengthens the narrative of digital assets as a hedge against inflation and a strategic reserve. Combined with Mara Holdings' Q2 performance and Tesla's remarkable 657% token price surge, these moves demonstrate a multifaceted market where volatility and innovation coexist. Market dynamics remained mixed, with Bitcoin dipping slightly to $118,159, while Ethereum maintained stability around $3,817. Despite a 4.8% market cap decline, trading volumes remained resilient at $146 billion, indicating persistent investor activity. The Crypto Fear and Greed Index signaled heightened optimism, with speculators anticipating upcoming catalysts like the planned release of quantum-resistant tokens and continued ETF innovation. As the day closed, Hong Kong-based RD Technologies secured $40 million for stablecoin initiatives, while Turkish ride-hailing giant Marti allocated 20% of its reserves to Bitcoin. These corporate allocations reflect a global trend of strategic asset diversification, with enterprises increasingly viewing cryptocurrencies as complementary to traditional assets. TON's ambitious projection to become a daily use blockchain by 2027 hinted at emerging competition, suggesting that Ethereum's dominance could face challenges from faster, interoperable networks. Meanwhile, the inclusion of Block and Coinbase in the S&P 500 marked a landmark recognition of crypto's financial legitimation, with both firms preparing for expanded roles in traditional markets. Throughout these developments, the blockchain ecosystem demonstrated remarkable resilience, balancing regulatory clarity with technological leaps. While risks such as quantum threats and phishing scams persisted, the industry's proactive response, from enhanced security protocols to forward-looking quantum-resistant solutions, signaled a maturing landscape. Institutions, corporations, and retail investors all played pivotal roles, driving innovation and adoption across borders and sectors. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.